How about utilities? The big one is Duke and Scanner. They're big in the area affected. Duke's down 20 cents, Scanner's down 18 cents. No huge impact there. How about the home improvement retailers who can expect to do well, given a lot of people rushing in for all kinds of what is it, shingles and heaven knows what else. Well, Home Depot's up 50 cents, Lowe's is up 30 cents. No big move. Generac, they produce high-end generators. They usually do well in catastrophes like this. I think the run-up's already occurred. This morning they're down 30 cents. Tobacco stocks, you might wonder why they would be affected. Well, the truth is that the Carolinas is where we grow tobacco.
A lot of
and if some of those tobacco fields are flattened or the crops affected, the price goes up, and therefore, again, the stocks are going up. Difficult day to cover, but we're doing it. With us today, Jeff Seeker, Mike Murphy, Susan Lee, and Ashley Webster. Start with the overall impact on the economy. Jeff, in my opinion, short-term bad, huge disruption. Long-term, much better because of rebuilding. What do you say?
Right, well, I agree. I mean, most of these storms or natural disasters affect the small businesses. That's what's going to be impacted dramatically. But as far as the overall market and overall economy, it'll be a blip, if that. And there'll be a very resilient economy locally, but not nationally. There'll be no effect.
Mike?
Totally agree. North Carolina, South Carolina, the areas affected by the storm will be better after the rebuild. Right now, the story is about the lives and the people in risk and danger down there.
It's a story of human misery at this particular point. Anything to add?
Jobless claims usually go up the week after, but then they recover. And then also we have auto sales actually picking up in the year after disasters like Hurricane Harvey, Irma, and possibly Florence.
And always questions about regulations. Were they too lax prior to this and too many people allowed to build in areas they shouldn't? That's always a question that comes up after this.
Should we rebuild in areas which keep getting clobbered?
That are flooded and...
It's a moral question.
Year after year.
It's a financial question, too, because who pays? You take that risk. Who takes the financial risk? Is it you and I, the taxpayer, or is it the home buyer? Who knows? I don't know that. Let's get to insurance. Put those on the board again, please. Mike, you don't think that it's going to be a big hit for the two insurers who are big in the Carolinas?
No, and if you look at the stock today, they're both moving higher in the market. This gives them the ability to raise premiums on people. So the insurers, they have it figured out with what they're taking in from you. They usually don't lose money by taking your insurance. So they'll be covered one way or the other. So even though they're paying out a lot of money, premiums will go up. They'll take in more money.
We also have to remember that if you've got a regular homeowner's policy, storm surge, flood damage, not covered. You've got to get flood insurance from the federal government, from the FEMA people, and the number of people with that insurance is going down.
Right. Well, yeah, and also there's about 5% less people who have flood insurance this time than the last natural disaster. That's problematic because there's a lot of people who don't get their homes back because they're relying on federal aid, and that's not going to happen.
You own a hotel down there.
Yes.
Is it the Carolinas, I think?
I own a hotel in Hilton Head, South Carolina, so we have been hit hard. We're waiting to see what the property damage is. Obviously, we're more concerned about our workers than the lives of the people living there, but it is impactful. I mean, you talk about the hospitality industry in North and South Carolina is about $50 billion. That's going to be dramatically impacted.
Forgive me for asking, you don't have to tell me, but have you got flood insurance on your hotel?
We do, and flood insurance is very, very expensive in coastal towns and getting more and more expensive. As Mike said, we need to have it. We needed to have it for a time like this. But what people don't count is the amount of tourism that we will actually lose as a result of this.
That's a good point.
Yeah, you're not insured for that, are you?
No, we're not insured for that, and our workers are, they're counting on busy tourist seasons, so...
May I ask you, what's your deductible on flood insurance?
You know what? I don't know exactly what it is. I'd rather wait, maybe not to...
You don't want to know.
No, I'm laughing about it because it's often 2, 3, 4% of the insured value of the property.
Yeah.
I mean, if you've got a multi-million-dollar hotel, you're paying tens of thousands of dollars in insurance.
A lot. And when you look at these things, you wonder why you pay them, and then when you're in the midst of them, you wish you had more.
Now you know.
Well said. What do you got, Sue?
Oil. That energy is a big deal because we do have the Colonial Pipeline, which goes from Houston to New York, but pipes gas, diesel, oil across the states. that could be hampered and damaged through Hurricane Florence. Also, the Atlantic pipeline goes across North Carolina as well.
So watch out for that.
Yeah, disruption.
By the way, if you're following interest rates as any kind of pointer for the stock market, look at this. I don't think we can get it up on the screen, but the yield on the 10-year Treasury just hit 3%. That's kind of a magic mark,
Industrial production in August was a very strong number, and of course the Fed could be raising rates again at the end of this month. We see the yield go up.
However, a 3% yield on the 10-year Treasury has not produced a sell-off on Wall Street at this point. Nobody cares?
We've seen this before. Nobody cares, again, because it's moving higher because the underlying fundamentals support higher interest rates. As long as that's the story, market will be fine.
I don't want to digress too far away from Florence, but the market seems like it just wants to go up again. We're in another of those phases, aren't we?
Yeah, well, people are focusing not on trade wars, not on geopolitical events. They're focusing on the underlying earnings, and the underlying earnings and prospects for next year are very strong.
Because wages, not so much wages, but middle incomes are going up.
Incomes and wages are also going up.
They're going
as well.
up too.
Yep.
That's true. All right.